What if I told you that most traders who win still end up losing money in the long run? You win a trade, maybe even a big one, and you feel on top of the world. But that's exactly where most traders fail. They think the job is done. They close out early, take profits too soon, or worse, they celebrate and forget the importance of extracting every ounce of value from that edge. Lee Freeman Shore makes it painfully clear. The difference between mediocre and exceptional traders lies not in how often they win, but in what they do when they win. The data doesn't lie. In managing more than 45 traders, each with access to top-tier research and deep market insight, he saw something astonishing. The majority of them, despite being right on their thesis, still underperformed. Why? Because they didn't press their winners. They failed to ride them. They didn't recognize that a winning trade is not a trophy, it's a vehicle, and you either ride it hard or leave profits on the table. This is the uncomfortable truth. A winning trade is not success until you've maximized it. Think about your own history. How many times have you gotten out at 5% only to watch it run 50% more? That's not just lost opportunity, that's strategic weakness. Freeman Shore observed that top performers were merciless when it came to winners. They added to them. They rode through volatility. They accepted discomfort. And they knew that when a trade was right, it demanded more capital, not less. The amateur shrinks away from risk even when the evidence is in their favor. The professional, on the other hand, understands this is the exact moment to get aggressive. You've got to shift your identity. Stop thinking like a gambler who got lucky. Start acting like a manager who's harvesting edge. Look back. How many of your winners did you underplay? How many trades should have changed your month but didn't? That's not because the market betrayed you. It's because you betrayed the opportunity. And here's where it hurts. You probably didn't even know it. Most traders are so focused on not losing that when they win, they breathe a sigh of relief and exit. But this isn't about surviving. This is about compounding. One of the greatest lessons in the art of execution is that discipline doesn't just apply to stops. It applies to holds. Freeman Shore's top traders had one common trait. When they were right, they went in harder, they stayed in longer, and they let the market reward them for being right. What's stopping you from doing the same? Fear? A belief that you never know what might happen? That belief is costing you more than your losses ever did. Because the true edge in trading is rare. When it shows up, you must milk it for everything it's worth. Think about it. A trader who wins 40% of the time but extracts 3R from each winner will destroy a trader who wins 60% but only takes 1R each time. That's the math of discipline. That's the geometry of execution. You're not trying to be right all the time. You're trying to be effective when you're right. Every time you exit too soon, you're not being cautious. You're being wasteful. That's not humility. That's sabotage. So here's the pivot. Stop asking whether a trade will win. Start asking, what will I do if it does? Prepare your response. Commit to it. And when that moment comes, when you're sitting on green, don't hesitate. Press. Lean in, expand, exploit. This is where the amateurs stop, and this is where the greats begin. Have you ever stared at a losing trade, telling yourself it would turn around if you just gave it a little more time? That's not strategy. That's hope. And hope is the most dangerous drug in trading. In Lee Freeman Shore's research, the traders who consistently failed weren't the ones with bad ideas. They were the ones who refused to cut losses. They believed, falsely, that the market owed them something, that their original thesis was right and just needed more time to play out. But the market doesn't care about your timeline. It doesn't reward loyalty. It rewards execution. The worst performing traders in the study had something in common. They let their losers grow. They waited. They watched. They begged the chart to reverse. And when it didn't, they doubled down. Sound familiar? If you've ever added to a loser thinking you'd get a better average, you've played with fire. And chances are, you got burned. Freeman Shore makes it clear, hope kills portfolios. What's worse, it hides in noble-sounding phrases. Long-term view, fundamentals are solid, market is irrational. But all those excuses are just masks for emotional paralysis. Professionals don't hope. They cut. They accept they were wrong. Not because they're smarter, but because they're more honest. The trader who survives is the one who doesn't fall in love with a bad position. You've got to treat your losers like a virus. Contain them before they infect everything else. The best traders in Freeman Shore's study, the assassins, treated losses like a math problem. Once the position went below a certain threshold, they exited. No debate, no bargaining, no second guessing. This wasn't courage, it was discipline. They weren't emotionally numb. They were committed to staying alive. Because in trading, survival is the first win. You don't get to play the next game if you blow yourself up today. And here's the kicker. Most of the worst trades didn't start terrible. They were small losses at first, manageable, but the trader delayed. A few more ticks, a rebound, a headline. And by the time reality sank in, the position had cratered. Your job isn't to be right. Your job is to protect capital. And that means killing your darlings early. Cut first, ask questions later. You can always re-enter. But you can't always recover. Every tick against you is not just money, it's mental weight. And that weight adds up. It clouds your judgment, distorts your risk tolerance, and turns you into a reactive, emotional wreck. The assassins knew this. That's why they struck quickly and consistently. And ironically, because they cut their losers fast, they had the freedom to hold their winners longer. Cutting losses isn't just defense, it enables offense. It frees you to think clearly, to act when it matters. Freeman Shore calls this the most reliable predictor of long-term outperformance. Not win rate, not IQ, just the courage to kill a trade that's not working. So what about you? Do you have rules? Real ones? Not suggestions, but hard lines in the sand? Where does the trade die? Do you even know? Because if you don't, you're not trading. You're just gambling with extra steps. And you're not just losing money. You're building a habit of denial. That denial is the root of most blown accounts. It starts with a red candle, then a shrug, then silence, and finally, regret. You don't need more analysis. You need more discipline. You don't need better predictions. You need better exits. Freeman Shore's lesson is brutally simple. The best traders cut their losses faster than you think is necessary. That's why they're still in the game. If your losers keep lingering, it's time for a new rule. One that says, the moment this trade violates my thesis or hits this defined number, I'm out. No story, no spin, just action. The longer you wait, the harder it becomes. Because your identity gets wrapped in the outcome. Your ego is on the line. But ego has no place in execution. Let your stop loss be your ally, not your enemy. Write your exit before the entry, because once you're in, emotion takes over, and emotion is expensive. So here's the question you need to ask today. What losing trade are you hoping will turn around? Find it, face it, and cut it, because every second you wait is a vote for fantasy over reality, and in the markets, reality always wins. What if your position size says more about your mindset than your market analysis ever could? In Freeman Shore's observations, traders fell into clear behavioral archetypes based on how they sized their trades. The size of your bet isn't just a number, it's a mirror of your confidence, your fear, and your psychological readiness. He described the difference between snipers and rabbits. The sniper is calm, precise, and lethal. They wait for the moment, and when it comes, they fire once, big and clean. The rabbit, on the other hand, is frantic. They place many small trades, scattered across ideas they're not fully committed to. They hedge not with logic, but with insecurity. And the result? A diluted portfolio that reflects a diluted mindset. If you're always trading small, always hedging, always dipping a toe instead of jumping in, you're not managing risk, you're avoiding responsibility. Because big trades force you to own your thesis. They force you to prepare. They force you to care. And that changes everything. Freeman Shore found that the most successful traders weren't always right more often. But when they were right, their conviction was visible in their size. They bet big, not recklessly, but deliberately. They knew that edge without size is meaningless. What's the point of being right if it barely moves the needle? The rabbit thinks they're being smart by diversifying. But really, they're spreading fear. They don't believe in anything enough to go all in. and that lack of commitment shows in the results. Snipers, on the other hand, are brutally selective. They may sit on the sidelines for days or weeks, but when they strike, they go in with power. And here's what you need to ask yourself. Are you a sniper or are you a rabbit? Look at your trade history. Do you see scattered entries, half-sized positions, and a reluctance to press your conviction? Or do you see a pattern of patience followed by decisive execution? Most traders think they're being conservative when they trade small. But if that size doesn't match your edge, it's not caution, it's cowardice. You're telling the market you don't really believe in your setup. And guess what? The market believes you. Freeman Shore isn't romantic about this. He's empirical. He saw the numbers. Rabbits underperform, not because they're bad analysts, but because they're bad executors. Execution requires courage, and size is the physical form of that courage. If your best ideas look like your worst ones in your sizing model, you've failed to discriminate. And in trading, that failure is fatal. It flattens your equity curve and kills your potential. This doesn't mean you size recklessly. This means you know the difference between high conviction and low conviction, and you express that difference clearly. It's about intentionality. It's about alignment. Your account should reflect your belief. Freeman Shore reminds us that trading small isn't always smart. Sometimes it's just safe, and safe doesn't scale. So look again at your next trade. Ask yourself, not just if it will work, but how much you're willing to risk to find out. Because your size reveals your soul. And if you keep hiding behind small lots and scattered plays, you'll never reach the level where edge compounds. Snipers make their edge visible. Rabbits hide their doubt in the grass. Don't scatter. Don't hedge your personality. Show up with size. Show up with clarity. Decide what kind of trader you want to be, and let your position size prove it. What if I told you the most elite traders aren't the boldest risk takers, but the coldest executioners? Freeman Shore calls them the assassins, and they all shared one brutal habit: cutting losing trades without hesitation. No mercy, no emotional debate, no second guesses. When a trade wasn't working, they executed the exit with precision. And that made all the difference. Because the assassins understood something most traders don't. A losing trade is not a sign of failure, it's a test of discipline. Your ability to walk away from a red position is your edge, not your shame. These traders were not reckless. In fact, they were the opposite: methodical, detached, calculating. They had rules, and they followed them like rituals. 10% down? Cut it. Thesis violated? Kill it. No emotion, no narrative. They didn't need to justify exits because they had already justified their entries. And if the trade disobeyed the thesis, it was out. Simple. This isn't just about risk management. It's about mental clarity. The assassins had no dead weight in their portfolios, no hope trades, no emotional anchors. Every position was clean, intentional, and subject to termination at the slightest hint of decay. That's what made their results so consistent. They didn't ride losers into the ground. They didn't argue with the tape. They didn't let ego override strategy. And this style wasn't just effective, it was scalable. Because once you master detachment, you can handle more trades, more capital, more volatility. You're not weighed down by your baggage. Compare this to the average retail trader. One red position becomes a therapy session. You stare at the screen. You reread news articles. You move the stop lower. You pray. And then you freeze. Meanwhile, your capital bleeds. Your mental energy drains. Your objectivity dies. That's not trading. That's emotional chaos. The assassin avoids all of this with a single act: execution. One click, one exit, one recovery. You don't have to be heartless, but you do have to be ruthless. Because the market doesn't care how much you believed in a trade. It only cares how you respond when the trade turns against you. The assassin treats red trades like toxic assets. Get rid of them fast, clean the book, reset the mind, stay dangerous. That's why they survive longer, perform better, and sleep easier. And here's the hard truth. You already know which of your trades should have been killed. You feel it. The hesitation, the shame, the weight. You let it live because you didn't want to admit defeat. But trading isn't about ego. It's about freedom. And the more bad trades you hold, the more you imprison yourself. The assassin knew this. That's why they cut quickly, unapologetically, and often. They weren't cold-blooded killers. They were truth-tellers. They didn't wait for permission. They acted. You need to do the same. Create your rule. Define your kill switch. Program your exits as if your future depends on it, because it does. And the next time you see a trade slipping, ask yourself, what would an assassin do? Then do it. No drama. No story. Just clean execution. That's what separates the elite from the emotional. And until you can kill your losers without flinching, you'll never know what winning really feels like. What if the biggest mistake you make isn't cutting your winners too late, but cutting them far too soon? In Freeman Shore's book, the hunters stood out for one simple reason. They let their winners run. While most traders took profits quickly out of fear, the hunters acted more like apex predators. They stalked their trades and let them mature. They understood that edge isn't just about being right, it's about pressing when right. These traders didn't flinch at early volatility or minor retracements. They had a rare quality, patience in the green. Think about how often you've exited a trade because you were afraid of giving profits back. That fear? It's the death of potential. A 5% winner could have been a 50% game changer. But you settled. Freeman Shore observed that the hunters had no interest in being merely correct. They wanted to be capital efficient. They didn't let discomfort interrupt compounding. These traders often endured sharp pullbacks. They watched profits evaporate temporarily, but they stayed in because the thesis was still alive. That's the key difference. Most traders exit because of price action. Hunters stay because of conviction. The result? Asymmetric gains. Trades that defined quarters. Positions that built portfolios. You don't need to be right all the time when you allow your right calls to explode. And it's not just about profits. It's about posture. The hunter moves with purpose. They've done the analysis, they trust the setup, and they let the market prove them massively right. Compare this to the anxious trader who sees green and immediately thinks, I better grab it before it disappears. That mindset might protect small gains, but it guarantees you'll never hit your true potential. Think of this. Would you rather take 10 trades that each return 2% or 3 trades that run 30% plus while cutting the rest fast? The hunters chose the second option, and it's why their equity curves were steep, not flat. Freeman Shore doesn't make this theoretical. He shows real-world data. Traders who let winners run, even when it hurt, outperformed those who managed with fear. It's emotional, yes. But it's also practical, because once you stop cutting your winners short, your average gain balloons, your expectancy shifts, and you can afford to be wrong more often. Hunters didn't pray. They didn't hope. They executed. And when a trade was working, they stepped back and let the profits mature. It's a hard skill to do nothing when every part of your brain wants to lock it in. But this is the pivot. Your job isn't to harvest safety, it's to cultivate potential. A hunter understands that volatility is the tax you pay for meaningful upside. So the question becomes, how long can you sit with success? How much profit can you emotionally handle before sabotaging yourself? This is the work. This is the mastery. You're not just learning to take trades, you're learning to hold space for abundance. To sit with risk even when it's profitable. To trust your edge long enough to let it blossom. Because the market doesn't reward quick profits. It rewards sustained conviction. Freeman Shore's hunters weren't mystical. They weren't geniuses. They were disciplined and uncomfortable consistently. And if you want their results, you need their mindset. You need to stop selling yourself short. Let the next green trade live. Don't take profit because you're nervous. Take profit because the setup has finished. And when it hasn't, stay. Stay longer than feels safe. Stay until the market takes you out, not your fear. That's how the hunter wins. Not by catching more trades, but by letting one trade carry the weight of many. It's time to stop being in a rush and start learning how to truly hold, because wealth isn't in the entry, it's in the endurance. What if I told you that average traders play defense, but the elite, they attack their winners like warriors storming a fortress? Freeman Shore identified a rare archetype among his top-performing traders, the raider. These traders didn't just hold on to winners, they escalated. They didn't wait for the trade to come to them. When they saw strength, they responded with more strength. They added to positions that were already working, not randomly, not recklessly, but with fierce, calculated aggression. And that's what separated them from the rest. Because most traders think of a green trade as something to protect, the raider sees it as a signal to double down, to build an empire on top of that single position. They understand the raw truth. When the market agrees with you, that is your one window to go big, to press the advantage. This mindset is what turns modest trades into career-changing outcomes. And yet, few dare to do it. Most traders are so afraid of giving back profits that they can't even consider adding to them. But the raider embraces the moment, and they do it with structure. Freeman Shore's data revealed a consistent pattern. The most successful raiders didn't just pyramid blindly. They had strict criteria. They only added after confirmation. They scaled with momentum. They used strength to fund more strength. It was beautiful, brutal, and highly effective. You've probably been told not to average up. That scaling into a moving market is risky. But risk is relative. What's truly risky is ignoring your edge. What's reckless is staying small when the trade is begging to be magnified. The raider treats every working position as a battlefield. And if the path is clear, they march forward step by step, increasing their exposure while others retreat. This isn't ego, it's strategy. Because compounding works both ways. Yes, losses can spiral, but so can gains. The raider bets on momentum, and when it's real, they feed it. Most traders sabotage their own success by being timid in the exact moments that demand courage. Think about how many times you watched a winner run without you. Not because you weren't in it, but because you weren't fully in it. You dabbled, you played it safe, you took a fraction of what was possible, and deep down, you knew you had more conviction than your position size reflected. That's the opportunity cost raiders eliminate. They don't let fear dictate size. They let strength dictate size. Their motto is clear. If it's working, add. If it's failing, cut. But when it's working, you scale. Freeman Shore's raiders made fewer trades than their peers, but each winner was larger. Not because they got better entries, but because they rode the wave and paddled harder as it rose. They knew how rare conviction is. And when the market validated their thesis, they took that confirmation seriously. They didn't just nod and smile. They acted. So ask yourself, how many of your winners truly reflect your belief in them? How often do you say, this is a strong setup, and then trade it like you're unsure? That disconnect is what kills performance. The raiders' brilliance lies in their alignment, their sizing, their risk, their execution, all lined up behind their conviction. They don't just want to be right. They want to be rewarded for being right. And that's the key difference. That's why they dominate. It's not that they avoid losses. It's that they refuse to waste wins. They understand that a single trade done correctly can eclipse a dozen cautious efforts. The data supports this. Freeman Shore's raiders had fewer total trades, but significantly higher returns. Their equity curves weren't choppy. They were explosive. And it all came from this one behavior, attacking strength, not watching it, not fearing it, not locking it in early, but adding to it. The raider's way is not for the faint of heart. It demands planning, discipline, and emotional resilience. You can't improvise your way into this strategy. You need rules, entry rules, scaling rules, exit rules. You need a roadmap before the market moves, not during. And most importantly, you need the stomach to execute, because adding to a green position feels risky. It feels greedy. But it's not greed if it's earned. It's not risk if it's calculated. It's not reckless if it's working. This is how you break the ceiling on your performance. Not by trading more, not by predicting better, but by capitalizing harder. So here's your pivot. The next time a trade works, ask yourself, what would a raider do? Then do it. Add. Add smart. Add with structure, but add. Because if you're only ever betting small, even when you're right, then you're not really in the game. You're just watching from the sidelines with chips in your pocket. And nothing changes until you decide to swing like you mean it. Freeman Shore's raiders weren't perfect, but they were committed. And when the market gave them green, they pushed for gold. If you want their results, you need their boldness, their execution, their edge in motion, and the courage to build on what's already working. That's how you stop hoping. That's how you start compounding. That's how you become dangerous. What if I told you the best trades aren't always the loudest, but sometimes the rarest and the quietest? Freeman Shore identified a group of traders whose power came not from frequency, but from selectivity. He called them the connoisseurs. These traders didn't make dozens of trades every month. They didn't swing at every pitch. Instead, they waited and waited. And when the market gave them something truly exceptional, something that aligned perfectly with their strategy, their conviction, and their edge, they took it. And they took it hard. The connoisseur is a rare breed in the modern world of high-frequency distraction and noise. While others chase movement, they chase meaning. Their strength lies in knowing what not to trade. They skip the mediocre. They ignore the tempting setups that aren't quite there. And they refuse to let boredom pull them into action. To a connoisseur, inactivity is not weakness, it's wisdom. They understand that every trade you take is a vote for your system, a vote for your discipline, a vote for your identity. So they don't vote often, but when they do, it's decisive. And it counts. Freeman Shore's data revealed something incredible. Some of the most profitable traders made fewer than 5 trades a year. That's not a typo, 5 trades. But those trades were monsters. They were the kind of setups that don't come around often, but when they do, they pay for everything else. And that's the secret. The connoisseur doesn't need to be busy. They need to be aligned. When they act, it's not out of reaction, it's out of recognition. They recognize the signature of opportunity, and they respond with intensity. Most traders do the opposite. They spread themselves thin. They chase every tick. They force trades when the market is quiet. And in doing so, they bleed slowly, not from bad trades, but from average ones, from friction, from distraction, from noise. The connoisseur avoids all of this by simply saying no. No to subpar entries, no to cloudy theses, no to overtrading. And this gives them an enormous edge: clarity, clarity of focus, clarity of execution, clarity of mind. They're not exhausted by the market, they're energized by the hunt. Because for them, trading isn't about movement, it's about meaning. Freeman Shore notes that the connoisseur's equity curve doesn't look like a staircase. It looks like a series of flat lines followed by explosive moves. Periods of quiet, then moments of brilliance. And that's intentional. That's by design. They aren't trying to beat the market every day. They're trying to kill it once or twice a year. And that's all it takes. That's all it ever takes. Most traders waste their edge by trying to apply it constantly. The connoisseur preserves it until it matters, and this patience is their weapon. It allows them to be sharp when others are dull, focused when others are fried, strategic when others are emotional. They don't need a dozen trades, they need one masterpiece. And that mindset changes everything. It changes how they research, how they plan, how they execute. They treat trading like art, not war. Every entry is a brushstroke. Every position is a statement. They're not here to play. They're here to create something powerful. And here's the question: what if you did the same? What if you stopped trying to be active and started trying to be accurate? What if you reduced your trades by 80%, but doubled your conviction? What would that do to your results, to your stress levels, to your confidence? You see, the connoisseur doesn't just make better trades, they live a better trading life. Simpler, calmer, more deliberate. Their accounts reflect their clarity, and their clarity comes from discipline, from waiting, from not needing to prove anything. You don't have to be constantly trading to be a real trader. You have to be constantly ready. Ready to act when the stars align, ready to strike when the setup is undeniable, ready to risk only when the odds are stacked. Freeman Shore's message is clear. You can outperform by doing less, but only if the less you do is brilliant. That brilliance comes from waiting, from filtering, from refining. You become a sniper of opportunity, a curator of trades, a connoisseur. And once you make that shift, the entire game changes because you stop chasing the market and you start inviting it to meet you where you are. The connoisseur doesn't shout, they whisper. But when they speak, it matters. So maybe it's time to ask, are you doing too much? Are you trading out of habit instead of hunger? Is your activity masking your lack of clarity? If so, step back, slow down, and become selective, ruthlessly selective. Because in trading, quality will always beat quantity. And one brilliant trade is worth more than 100 average ones. Be still, be sharp, be rare. What if the real threat to your trading success isn't the market, but your own fear dressed up as logic? Freeman Shore described them as the rabbits. Traders who looked busy, who always had something on, who never missed a move, but never really made money either. Their problem wasn't laziness, it was fear. Fear of missing out, fear of being wrong, fear of being too exposed, and most of all, fear of commitment. Rabbits scatter their trades, never truly sizing in, never truly trusting themselves. They say they're managing risk, but they're really managing anxiety. They don't have real conviction, so they never make real money. Instead of choosing a few great setups, they jump into everything that moves. And each position is so small that even when they're right, it doesn't matter. They can't ride winners, and they can't cut losers with authority, because their entire system is built on avoiding responsibility. The result? Overtrading, exhaustion, and emotional burnout. Freeman Shore's data didn't lie. Rabbits consistently underperformed, not because they lacked intelligence, but because they lacked courage. The courage to choose, to size up, to stand behind a trade and let it breathe. Most rabbits think they're being smart by staying nimble, but in truth, they're just staying scared. Their portfolios are noisy and unfocused, a reflection of their internal state. No theme, no coherence, just a pile of reactions strung together by panic. And the worst part? Many of them work hard. They study charts, they read news, they show up early. But all of that effort is sabotaged by one thing: the inability to commit. The rabbit is the trader who says, I'll just start small and see what happens. But they never build in. They never scale. They never press. Every trade is a test, not a decision, and that's what kills their potential. Freeman Shore makes it clear there's nothing wrong with small size if it's part of a larger plan. But for the rabbit, there is no plan. There is only hesitation masquerading as caution. You probably know what this feels like. You've seen a setup, felt the conviction, then taken a half position, only to watch it soar while you stayed frozen. That hesitation is expensive, not just financially, but emotionally. Because every time you fail to act in alignment with your belief, you erode trust in yourself. And without that trust, trading becomes torture. You chase, you second guess, you cut too early, you add too late, you become trapped in a loop of activity without direction. That's the rabbit's world, always busy, never profitable, and always on the edge of burnout. Freeman Shore's research showed that the top traders, the assassins, the hunters, the raiders, had clarity. They knew when to enter, how much to size, and when to act. But the rabbit never decides. They dabble, they guess, they flinch, and then they wonder why nothing changes. This isn't just a trading issue, it's a mindset issue. Rabbits have a relationship with the market built on insecurity. They don't believe they deserve big trades, so they avoid them. They fear losses so deeply that they sabotage wins, and they measure progress not by performance, but by how many trades they took. That's not a business, that's an addiction. So if you see yourself in the rabbit, don't despair. But don't sugarcoat it either. You need to confront the fear. You need to name it. You need to admit that playing small hasn't protected you. It's drained you. And then you need to choose a new path, one where fewer trades matter more, one where size reflects belief, one where action replaces anxiety. Freeman Shore's rabbits weren't doomed. Some of them transformed once they realized what was holding them back. But transformation requires honesty, and it requires rules, real ones. Like, I will not enter unless I have a clear thesis. I will not size small unless I'm planning to scale. I will not hold trades I don't believe in, and I will not confuse busyness with productivity. Because true trading isn't about being active, it's about being intentional. Rabbits trade to stay busy. Pros trade to get paid. The choice is yours. Are you scattering your energy across the screen, hoping something sticks? Or are you building a system that demands respect from yourself and from the market? The rabbit hopes for results. The disciplined trader plans for them. And the difference is not found in the charts. It's found in the courage to commit. What if I told you that being wrong isn't the problem? It's what you do after that decides everything. Freeman Shore introduces you to one of the most painful but transformative archetypes in trading: the loser who learns. These are the traders who don't start off strong. In fact, many of them begin by blowing up accounts, by making every mistake in the book, by falling prey to emotion, fear, greed, and ego. But then something happens. They stop avoiding the pain and start investigating it. They begin to track their trades with brutal honesty. They review what worked, what didn't, and most importantly, why. They take responsibility. No more blaming the market, the Fed, or the news cycle. They realize that the common denominator in all their losing trades is themselves. And that realization is powerful, because once you own the loss, you can own the lesson. Freeman Shore saw that many of the best traders weren't born winners. They evolved through failure. They treated their account statements like sacred texts. Every line, every number, a message, a clue, a warning. These traders became obsessed not with being right, but with becoming better. They asked hard questions. Did I follow my rules? Did I act on impulse? Was my sizing rational or emotional? And over time, those questions turned into systems. Those systems turned into habits. And those habits turned into edges. This is the journey of every trader who transforms. Not from genius, but from grit. They don't just learn from pain, they build from it. Freeman Shore notes that this group of traders didn't avoid losses. They minimized damage and maximized wisdom. And that mindset is the antidote to despair. Because if every loss has value, then no trade is ever wasted. The loser who learns stops seeing red as failure and starts seeing it as feedback. They don't flinch when they're wrong. They document it. They don't hide from the drawdown. They map it. And as a result, they evolve faster than anyone else. Because they're not pretending. They're not protecting their ego. They're building something. Slowly, quietly, relentlessly. If you're losing in the market right now, this is your way out. Not a new indicator, not a hot stock, but a deeper level of honesty, brutal self-auditing, surgical refinement of your habits. You don't need to win today. You need to build the capacity to win tomorrow and the next day and the day after that. The traders who succeed long-term aren't the luckiest. They're the ones who adapt fastest. And adaptation begins with ownership. Full, unfiltered ownership. Freeman Shore's data showed that some of the highest performing traders were once the worst performers on his roster. What changed wasn't the market, it was their mindset. They stopped seeking perfection and started seeking progress. They embraced discomfort as their compass. They treated mistakes not as evidence of failure, but as fuel for mastery. And eventually, they became the trader everyone else admires. Not because they never fell, but because they never stayed down. You have that power too, but only if you stop hiding from your history and start rewriting it. Learning from losses isn't glamorous. It doesn't show up in highlight reels or social media screenshots. No one posts their red days with commentary like, "This is where I grew the most." But this invisible work is the engine of transformation. Freeman Shore revealed that traders who embraced post-mortem analysis outperformed even the most technically skilled peers. Why? Because they weren't just collecting knowledge, they were translating it into wisdom. There's a difference between knowing the market and knowing yourself in the market. The former gives you tools, the latter gives you power. And power is what separates the hopeful from the consistent. The trader who grows from failure develops something stronger than any chart pattern: resilience. You become unshakable, not because you avoid pain, but because you've metabolized it. Each mistake no longer feels like a scar, but a signature, a mark of your refinement. Freeman Shore emphasized that the traders who kept detailed journals, who wrote down their reasoning, their emotion, their exit thoughts, rapidly outpaced those who relied solely on memory or instinct. Your trading journal is your mirror. It doesn't flatter, it reflects. And if you stare into it long enough, it tells the truth, not about the market, but about you. Did you cut because of fear or discipline? Did you hold because of conviction or pride? These questions, revisited over time, form the foundation of mastery because eventually you stop making the same mistake twice, then 3 times, then never again. You begin to see through yourself. You catch your own patterns before they take over. You gain the ability to intervene, not just in your trades, but in your reactions. That's what transformation looks like. Not louder trades, sharper awareness. Freeman Shore called it the trading equivalent of emotional intelligence. And traders who built that muscle didn't just get better, they became different. Their equity curve mirrored their emotional growth, cleaner, smoother, wiser, and ironically, more boring. Less drama, fewer swings, but more consistency. And in trading, consistency beats brilliance. Every time. So if you've been on a losing streak, if you're doubting your path, remember this: the path of the loser who learns is the winning path. Every market wizard you admire once stood where you stand, unsure, angry, afraid, but willing to stay with the work. Because this isn't about genius, it's about grit, ownership, and patience. If you embrace that, then every loss is tuition, every setback is research, and eventually, your greatest mistakes will become your greatest teachers. And this is what separates the resilient trader from the broken one, not the presence of pain, but the relationship with it. Pain, in the hands of a reactive mind, leads to panic, revenge trades, and quitting. But pain, when approached with curiosity and discipline, becomes a compass. You begin to ask better questions, not just why did I lose, but what did I ignore? What did I assume? You stop needing to be perfect and start needing to be aware. Freeman Shore observed that the greatest leap in performance came not from better strategies, but from deeper honesty. The traders who rose from mediocrity to mastery were those who saw their weakness as a doorway, not a defect. They welcomed the discomfort of growth. They leaned into the uncertainty. And slowly, they became fluent in their own psychology. They recognized their tells, the hesitation before a bad entry, the rush of euphoria before over-leveraging. They designed rules not just for the market, but for their own minds. And as those rules took hold, their equity curves stabilized. They weren't chasing trades anymore. They were executing principles. Each trade was no longer a gamble. It was a test of alignment. Alignment between belief, behavior, and outcome. And when those things clicked, results followed. Freeman Shore didn't glorify these traders for their genius. He respected them for their perseverance, because they didn't wait for the perfect setup. They created it, trade by trade, habit by habit. You might be tempted to think this takes years. Sometimes it does, but sometimes it takes one decision, one choice to journal instead of rage, to close the chart and reflect, to read your own patterns like a coach, not a critic. And once that begins, momentum builds. You start seeing not just your losses, but your leverage, the emotional leverage that comes from knowing yourself. And then something else changes. You stop fearing failure. You stop trying to control the outcome. You control your process, and your process becomes your power. Freeman Shore repeatedly showed that traders who embraced this mindset became unrecognizable in the best way. They no longer traded for validation. They traded to express discipline. You've seen now what separates mediocrity from mastery. It's not the entry strategy or the secret indicator. It's what you do when everything goes wrong. And that's where the story of Freeman Shore's so-called assassins truly begins. These were traders who didn't just cut their losses, they executed them with surgical precision. Not emotionally, not reluctantly, deliberately. Because they understood something fundamental. Capital preservation is more important than capital multiplication. These traders accepted a brutal truth that most refuse to face. Sometimes your thesis is just wrong. No hope, no prayer, no averaging down is going to fix it. And the longer you delay the cut, the deeper the wound. Freeman Shore found that these assassins often lost just 20 to 30% of their trades. But their winners massively outperformed because they knew how to protect their downside. They didn't ride losers. They rode discipline. They didn't just have stop losses, they had identities tied to risk control. And that made them powerful, predictable in their exits, reliable in their behavior. There's a myth among struggling traders that the goal is to always be right. But the assassins didn't care about being right, they cared about surviving. And from that mindset came a paradox. By accepting more small losses, they earned more long-term profits. They were immune to the ego traps that cripple others. They didn't turn red trades into personal vendettas. They didn't double down to prove a point. They moved on. They reloaded. They lived to fight another day. Imagine that. Trading as if you were a soldier on a battlefield, not a gambler in a casino. Every trade, a mission. Every exit, an extraction. Your job isn't to win every trade. It's to return from every battle with your account intact. That's what made the assassins lethal. Not to the market, but to their own weaknesses. And once they neutralized those inner flaws, they became free. Free to let winners run. Free to cut losers. Free from emotional sabotage. And that's the next piece of Freeman Shore's genius. He observed that assassins had no attachment to any one idea. They were nimble. They didn't need to be right. They needed to be fluid, reactive to reality. While others were trapped by conviction bias, the assassins adapted. When new data came in, they shifted. When price defied expectation, they exited. No argument, no justification, just execution. You want to know what separates elite traders from the hopefuls? This is it. Hope has no place in execution, only preparation does. And preparation isn't just technical, it's mental, emotional, and spiritual. Freeman Shore didn't teach religion, but he described something close to faith. Faith in your risk plan, faith in your rules, faith that cutting fast was not failure, it was strategy. And the more these assassins followed that faith, the stronger they became. They had fewer regrets, fewer re-entries, fewer sleepless nights. Because clarity replaces chaos when your process is king. And once your process is king, profits follow like loyal subjects. So if you're still hesitating to cut, still hoping things will turn, remember this. Your hesitation is costing you not just money, but evolution. The longer you stay in a bad trade, the longer you delay becoming the trader you're meant to be. Assassins didn't hesitate. They respected pain. They saw a red candle and said, "That's my cue." They didn't negotiate with risk. They accepted it. And that acceptance gave them an edge sharper than any tool on a chart. Because the real edge was never the system. It was the self. You become your own edge when your execution is emotionless. And you become unstoppable when you treat every trade not as a chance to prove something, but as a moment to express discipline.